Hey there, everyone. Michael Santonato here, and I'm doing this video to do a little analysis for a friend of mine and a client, a very special client. You know who you are. And I've been asked basically, and I kind of suggested, with some of the stresses and struggles right now with COVID-19, there are, properties that are in the GTA, the Greater Toronto Area, that are not cash flowing right now. There's a lot of tenants, unfortunately, that are doing bad. Shame, 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 that are taking advantage of the backlog of the landlord and tenant board, and they're not paying their rents. So I have some friends and some real estate investors that are on a few properties suffering, unfortunately, because this COVID thing will be another year. It's September 2021, it's already been a year and a half, and there's probably going to be another year and a half of this stuff with new variants and deltas and stuff like that coming out. So unfortunately, the landlord tenant board is backed up. And so as a result, tenants are not paying their rents in some cases, and they're taking advantage of the situation. So in this video here, we're going to analyze this property. And it's currently in the area of Brampton in the Greater Toronto Area, and it is currently renting the top half of the house for $3,000, and the basement is currently renting for $1,350. However, it's currently vacant, so it's not cash flowing right now. So this is a great time right now to look at, since the market is super hot in Toronto, is it worth it? Does it make sense to sell? Okay, does it make sense to sell? And we're just gonna review the numbers, all right? So this property was one of those problem properties for my friend and client, where the tenants were not paying. Okay, so it's she managed actually to kick them out. Way to go! Yeah, way to go! She actually managed to kick them out, but for some time it was not cash flowing. So that's a bit of a problem. Currently, it's renting for nothing. However, when it was rented, it was being rented for $43.50 per month. Okay, and annually, that's $52,000. Now, that's pretty good. All right, but I find this to be a fairly high property tax. But you'll see in a minute that the value of the home has appreciated a lot, and so because of that, that's the reason for the high property taxes. And if you live in the GTA, that's just a matter of fact. Property taxes are high. What are you going to do, right? So for the annual net return from the purchase price, okay, based on purchasing it in 2005 on $600,000, that's an annual net rate of return of 7.4%, okay? It was 8.7% before the property tax was factored in. However, you have to factor in property taxes, okay? And if we factor in now that there's no rent coming in right now, then that will also reduce the rate of return as well. So depending on how many months go by, there may be more of a reduction in the net rate of return. Now, it's all about the rate of return. We want our money working for us. We need our money working for us. The more money works for us, the less we have to work physically, and the more we can enjoy life, pursue our dreams, travel, and all that good stuff. Okay, so the home being purchased $600,000 in 2005. The current market value now, she said, is $1.6 million. Now that's very realistic. I haven't seen the home myself. I actually didn't verify how many bedrooms and bathrooms it is. This is just a strictly financial perspective, but it's very likely that this could fetch, $1.6 million. Okay. Every week I hear about bidding wars. There's not enough inventory, and the immigration is just coming in, and the demand is just super high. And like I said in previous videos, the immigration is not going to stop in Canada. And that's because of the reasons that I stated in that video. But what you need to know is that demand will continue to go up in the GTA, and likely that will continue to have, bidding wars, because there's just not enough inventory and they can't keep up with the inventory. So let's say worst case, just in case, 1.4 million, although 1.6 million is possible. And there could even be a bidding war for higher than that. So I did numbers and financials for best and worst cases. Now, there's no mortgage on the property, okay, which is phenomenal and fantastic. Way to go, B. However, there is an outstanding loan that needs to be paid once the property is sold, if the property is sold. So closing costs, let's say a 5% best case scenario, okay, and then worst case scenario, higher percentage of closing costs for, I don't know, fees and taxes and whatnot, realtor mortgage fees, all that stuff. Are you doing the mortgage yourself? Are you getting a discount on the real estate fees? All that stuff. This is just, worst case. It's good to be prepared. If they get the full value that they want at 1.6 million, this would be the closing costs, best case and worst case, okay? Now, they've already spoken to their accountant, and there will be a capital gain tax realized of $100,000, so good for you for being proactive. I already spoke to your accountant. It's not a primary residence, so there will be taxes paid on the property, okay? So the net profit that's possible on the worst case, this is after all the, loans outstanding, the taxes, the closing costs, all that stuff. Worst case scenario on the lower valuation, $1.15 million net profit. This is after taxes paid, okay? You can see the formula here. Proper value, if they get the full value that they're looking for, $1.24 million, which is great. So ultimately, fantastic, great investment, great property, great job. And obviously, since 2005 purchasing, very well done, very smart, and great appreciation, seal of approval, great, sale from purchase to sale now. What I don't like though is the net return. The net return is quite low. In my opinion, real estate should be providing 10% annually minimum on the real estate, on the cash flowing, okay? Now, this is because the property taxes are high and maybe the rents are low. I don't know, maybe more rent could be obtained from this. I'm not sure, I don't know. But I don't love this rate of return. I find it kind of low, okay? And then also if it stays vacant, then it'll go down even further. So what are your options? I recommended selling, however, I've got a sort of second opinion now, okay? The power of real estate is leverage. Without a doubt, the power of real estate is leverage. Anytime you find real estate investment courses or real estate investment videos, they're usually talking about leverage, because that is the power and the beauty of property, is the ability to refinance it. Yes, the bank owns the equity that they give you or the cash that they give you, but real estate is only going in one direction over time, and that's up. So option one is take a mortgage out, refinance the home and leverage it, okay? Reinvest the money and get a higher ROI, which will allow you to accumulate wealth faster. So you're still keeping the property, you're keeping the equity in the property, and it will continue to accumulate as population grows and as real estate, continues to grow in the GTA, okay? And also, I love this because you get to write off the interest that you're then using to reinvest. This is a super trick I'm always using, I'm always leveraging, always writing off the interest. It's very legal. You write off the interest that you pay for investing purposes. This is a ninja secret that I love. And then also the good pro too is you can find new tenants. Yes, the last tenants were problem tenants and they weren't paying, but those are done days and they're over with. So new tenants can provide cash flow, also paying off the new mortgage, right? So this is still win-win. Your mortgage is still being paid off. You're going to use that equity in your home and leverage it to reinvest and make more money. Okay, the risks, those are the pros. The risks associated with this are that the tenants market is dodgy right now. As I mentioned, there's many tenant issues. The landlord-tenant board is backlogged. Tenants know this, they're taking advantage. So there's a risk in potentially new tenants also not paying rent, One solution to that is to get paid upfront for the full year upfront. Now that's rare, but I do have friends that just did that very thing and just found tenants doing that very thing, paying a full year's upfront in Woodbridge. It is phenomenal. Okay. Now the market could also be in a bubble. It's unlikely, but the COVID, it's a pandemic. The stock market is going to crash any day, any month now. They just keep printing money, and inflating the stock market. Stock market goes down, real estate might take a hit too. GTA property market has just been on a super incline for the last 15 years. It's just outrageous. Who knows? It could still be in a bubble. It's a risk. We've got to factor that in. And then also the risk is taking on a new debt in a new mortgage. Now, those are all the risks that I can foresee, okay? The biggest one being the tenant market, but you can solve that by getting a year's, paid up front. That's one option, okay? Keep the house, let it accumulate the equity. Obviously, it's done very well. And then leverage the money and let it work for you. Also getting a tax write-off, okay? Now, The other idea, the other option is sell the property completely and reinvest the total amount. And the pros, the positives of this are you're diversifying. So instead of having one house, you can have, two houses or even three houses. Okay, you can take this money and turn, one house, even with this option. Whoa, sorry about that. Even with this option, you can still take that money, reinvest and leverage it and create a second home. But with this, if you sell the property in full, you can diversify into 3 different homes in different jurisdictions as well, by the way, not necessarily just the GTA. Niagara Falls is growing. There's options in Niagara Falls. There's great opportunities in Florida that I'm connected to, where we've got some great cash flowing properties in Florida. And also outside of the GTA, like in Huntsville, I have a current opportunity that I'm considering and looking at in Huntsville. So diversification, take one house, turn it into 3, okay? Larger amounts can also create larger wins. $1 million invested at 20%, let's say rate of return, is still obviously better than 100,000 only at 20%, okay? In this case, I just used this would be 100,000 or 300,000. Well, $1 million at 20% produces a higher ROI than 100,000 at 20%, okay, without a doubt. Also, if you sell this property, one less property to worry about and find tenants for. If you, let's say, decide to do the investment with us in Florida, we find the tenants for you. The tenants are actually already there. I'll make a separate video about Florida real estate if you'd like. Check my YouTube channel for that or just request that. And also, by eliminating the GTA and this current area in Brampton, you're nullifying any COVID tenant issues for next year. The properties in Florida that I invest in have no tenant issues whatsoever because they're government subsidized homes. So they're basically Section 8, which is like welfare homes. So there's no loss there because the government is your tenant, and the government is probably the best tenant you could ever have. So if you decide to sell the property and reinvest the total amount, you're getting a higher ROI, you're diversifying, and you don't have the mental stresses of the property, but you're also nullifying any COVID tenant issues for the next year or few years, okay? Land is also another option, just as an example. The risks of this is you're losing out maybe a little bit of FOMO, you're losing out on the equity or the growth in the Brampton or the GTA market. And the other risk is that you need to select your new investments carefully, which of course I help you vet and verify. So I don't see any other risks other than that. You've already netted a large profit on the property. You already have a significant, profit. And you won't have any tenant issues, which I'm a big fan of because I like to eliminate risk. My job is to eliminate risk, and we've already eliminated a lot of the risk in the Florida properties, for example. So those are your options. It's great to know you have options. I'm here for you, of course. Any questions, text, email, call, all that good stuff. And if you are watching this video and you want to have your opportunities or your situation analyzed, just comment, reach out to me, go to our website at michaelsantonato.com, and we'll see how we can help you. Thanks so much for watching this video. I hope it was helpful. If it was, please feel free to leave a comment and like and subscribe. Thanks so much. Have a great day.